Mike Kelly joins us now to discuss what all of this may mean for energy prices. He is the head of research at Seaport Global Securities. Mike, welcome. Nice to have you here.
Thanks for having me.
What are the implications of the explosion last night in terms of the backdrop of a 9% gain on the week in crude oil prices? How much is that going to add to either advances, or is the market going to take it in stride?
Yeah, so the two items that we're really dealing with today was definitely not a boring day to be an energy analyst, that's for sure. So the Philadelphia refinery fire, I think that's going to be more temporary in nature. That may drive prices for gasoline, what consumers will pay at the pump up in the Northeast, 5 to 10% higher. But we'll make those barrels back. We'll import more gasoline if we need to. That's not that big of a deal. It's Iran. That's the biggest near-term issue, the biggest driver that could send crude prices, if this escalates, $10 to $20 higher, given how important Iran is in the international markets as a supplier of crude.
And along those lines, Mike, another Wall Street energy analyst said something this week that I'm intrigued about. She said that she feels that the price of crude oil, whether it's domestic or Brent North Sea, would be above $100 a barrel if it were not for U.S. production. She said if this happened 5 years ago, oil would be at $100 a barrel. What do you think?
Yeah, I agree with that 100%. We were in 2014, $100, what we averaged. And then we have this thing called shale and fracking. So we figured out how to unlock an unbelievable amount of black oil here in the U.S., and that's changed the game.
So does the United States become the flex producer, in effect, that Saudi Arabia used to be?
They're both kind of flexible players, and right now, Saudi they're taking barrels off the market to basically make room for U.S. crude, and U.S. becomes a flexible producer when oil prices get too low. Then they just $45, they say, hold up, this doesn't make sense, and then they stop, and you get a little bit of rebound in oil prices. So that's kind of the way those two key players will keep crude, we think, between a kind of a $45 and $65 world.
On that note, Mike Kelly with Seaport Global Securities, thank you very much.